Preparing for a Calypso interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is Calypso, and where does it fit in a capital markets operating model? Calypso is a front-to-back capital markets platform used to capture trades, value them, manage risk, and process confirmations, settlements, accounting, and reporting. I think of it as the system of record for many OTC and exchange-traded products. Front office uses it for pricing and trade entry, middle office for validation and risk, and back office for lifecycle events, payments, and reconciliation. The value is one trade flowing through controlled downstream processes. While answering, focus on Calypso as a front-to-back capital markets platform, the users across front, middle, and back office, and how one trade record supports pricing, risk, settlement, accounting, and reporting. Question 2. Walk me through the trade lifecycle in Calypso from booking to maturity. A clean answer follows the lifecycle, not just the screens. A derivative trade is captured with economics, counterparty, book, product, and settlement details. It is validated, enriched with static data, priced using market data, and approved through workflow. Then confirmations, collateral, payments, resets, exercises, and accounting are generated as events. At maturity or termination, final cash flows and profit and loss are recognized, and operations reconciles Calypso against custodians, brokers, and the general ledger. Make sure to cover the full trade lifecycle from capture and validation through valuation, confirmation, settlement, accounting, lifecycle events, reconciliation, and maturity, rather than describing only the initial booking step. Question 3. How do front office, middle office, and back office teams use Calypso differently? Front office is mainly concerned with trade capture, pricing, position visibility, and pre-trade or intraday risk. Middle office controls the trade, validation, limits, market data checks, independent price verification, profit and loss explain, and exception management. Back office takes the validated trade and processes confirmations, settlements, cash flows, messages, accounting, and reconciliations. In Calypso, the same transaction object can feed all three areas, but permissions, workflows, and responsibilities are separated. In your answer, talk about how different teams use Calypso: front office for booking and pricing, middle office for validation and risk control, and back office for settlement, confirmations, and accounting. Question 4. Why is static data important in Calypso, and what static data would you check for a trade break? Static data drives whether trades process correctly. A simple swap can fail downstream if the counterparty lacks settlement instructions, the book is mapped to the wrong legal entity, or the holiday calendar is missing. In Calypso, I would check counterparty, book, trader, product template, currency, calendar, SSI, netting, and accounting mappings. Good static data reduces breaks because valuation, confirmations, settlements, risk, and ledger postings all depend on the same reference setup. Be sure to mention static data examples such as counterparties, books, legal entities, calendars, currencies, products, settlement instructions, and accounting mappings, and explain why bad setup causes downstream breaks. Question 5. A settlement payment failed in Calypso. How would you investigate it? I would start from the exception, not guess. First, identify whether the payment was generated, authorized, and included in the correct message or settlement batch. Then I check cash flow dates, currency, SSI, counterparty, netting rule, holiday calendar, and workflow status. If the message was sent, I compare Calypso with Swift, Custodian, or Nostro records. The key is separating configuration issues, missing static data, operational approval gaps, and external bank rejections. While answering, focus on a structured investigation: payment generation, workflow status, cash flow details, SSI, currency, calendar, netting, message status, and reconciliation against bank or custodian records. Question 6. What controls should exist around trade amendments and cancellations in Calypso? Amendments and cancellations are high risk because they change economics after booking. In Calypso, I would expect maker-checker workflow, audit trail, reason codes, and controls over backdated changes. The impact must be assessed across valuation, profit and loss, confirmations, settlements, collateral, and accounting. For example, changing a swap fixed rate after confirmation may require reconfirmation and cash flow regeneration. A strong answer shows you understand both system action and operational control. Make sure to cover operational controls around amendments and cancellations, including approval workflow, audit trail, backdated changes, reconfirmation, regenerated cash flows, profit and loss impact, and downstream accounting or settlement effects. Question 7. How does Calypso use market data for valuation and risk reporting? Calypso valuation depends on clean market data and correct pricing configuration. For an interest rate swap, the platform needs curves, calendars, day count conventions, discounting methodology, and trade economics. If the curve is stale or the wrong valuation date is used, PV and Greeks will be wrong. I would validate market data load status, pricing environment, model selection, and benchmark comparison. Valuation issues usually flow into profit and loss, risk reports, collateral, and accounting. In your answer, discuss valuation inputs and controls, curves, volatilities, calendars, day counts, pricing environment, model selection, market data loads, stale data checks, benchmark comparison, and downstream profit and loss or risk impact. Question 8. What does profit and loss explain in Calypso, and why is it important? Profit and loss explain is about proving why value changed between two dates. In Calypso, I would break movement into carry, market moves, new trades, cancellations, amendments, realized cash flows, and model or static data changes. For a swap book, curve movement and accrued interest are usually key drivers. A good process reconciles explained profit and loss to total profit and loss and flags unexplained residuals. Interviewers like this answer because it links valuation to controls. Be sure to explain profit and loss as a control process, covering market moves, carry, new trades, cancellations, amendments, realized cash flows, model changes, unexplained residuals, and reconciliation to total profit and loss. Question 9. How are confirmations and settlement messages generated in Calypso? Confirmations evidence that both parties agree to trade economics, while SWIFT or payment messages instruct settlement. In Calypso, message generation is typically event-driven. A validated trade, lifecycle event, or payment triggers a message template and routing rule. I would check product type, counterparty language, confirmation status, message setup, SSI, and delivery method. Breaks often arise from missing templates, incorrect static data, or workflow status blocking message release. While answering, focus on event-driven message generation, confirmation templates, workflow status, counterparty setup, delivery channels, SSI, SWIFT payment messages, and common reasons confirmations or settlement messages fail. Question 10. How does accounting work in Calypso for trades and cash flow events? Accounting in Calypso translates trade and cash flow events into ledger entries. The setup usually maps product, book, legal entity, event type, currency, and accounting rule to debit and credit postings. For example, a coupon payment may create interest income or expense, cash movement, and accrual reversal. I would emphasize reconciliation. Accounting entries must tie to trade valuation, realized cash flows, and the general ledger. Bad mappings create financial reporting breaks quickly. Make sure to cover how Calypso accounting rules convert trade and cash flow events into debit and credit entries using mappings by product, book, legal entity, event type, currency, and ledger account. Question 11. Explain how collateral or margin processing is handled in Calypso. Collateral management reduces counterparty credit exposure. In Calypso, exposures are calculated from trades, netting sets, CSAs, thresholds, minimum transfer amounts, eligible collateral, haircuts, and valuation timing. If exposure exceeds agreed limits, a margin call is issued, disputed, agreed, and settled. I would mention that OTC derivatives margining differs from exchange margin, but both need daily controls. Collateral results affect liquidity, counterparty risk, disputes, and sometimes accounting presentation. In your answer, talk about collateral as counterparty risk mitigation including exposure calculation, CSAs, thresholds, minimum transfer amounts, eligible collateral, haircuts, margin calls, disputes, and settlement. Question 12. What are engines and scheduled tasks in Calypso? And why do they matter? Calypso uses engines and scheduled tasks to automate processing. Engines listen for events, such as trade validation or payment generation, and then trigger workflows, messages, transfers, or accounting. Scheduled tasks run batch jobs like EOD valuation, reports, market data imports, and reconciliations. If a process fails, I would check engine status, task logs, permissions, dates, and dependencies. This shows practical awareness beyond trade entry screens. Be sure to mention that engines and scheduled tasks support automation, event processing, EOD valuation, market data imports, reports, messages, transfers, accounting, and troubleshooting through logs and dependency checks. Question 13. How would you approach onboarding a new product in Calypso? I would treat new product onboarding as a controlled front-to-back project. First, confirm business requirements, product economics, pricing model, lifecycle events, risk measures, and reporting. Then configure templates, books, legal entities, confirmations, settlements, collateral treatment, accounting rules, and permissions. Testing should cover normal trades, plus resets, amendments, cancellations, maturity, and exception scenarios. I would involve front office, risk, operations, finance, technology, and compliance, because one missing downstream rule can break production. While answering, focus on product onboarding as front-to-back configuration and testing, covering trade economics, pricing, lifecycle events, risk, confirmations, settlements, collateral, accounting, permissions, and sign-off from all impacted teams. Question 14. How would you investigate a reconciliation break between Calypso and an external system? Reconciliation proves Calypso agrees with external and internal records. I would compare positions, cash, trades, valuations, and accounting balances against brokers, clearinghouses, custodians, banks, and the general ledger. When a break appears, I classify it as timing, missing trade, economic mismatch, FX, fee, settlement, or accounting mapping. Then I assign ownership and track resolution. Strong reconciliation discipline prevents NAV errors, client disputes, and financial reporting issues. Make sure to cover reconciliation types across trades, positions, cash, valuations, and accounting, plus break classification, root cause analysis, ownership, resolution tracking, and impact on NAV, reporting, or client statements. Question 15. If end-of-day valuations are delayed in Calypso, how would you handle the production issue? I would communicate impact first, then investigate. For delayed EOD valuations, I would check whether market data loaded, pricing engines are running, scheduled tasks completed, and any product or book is causing exceptions. I would prioritize critical books, rerun failed tasks where safe, and escalate technology issues with logs. At the same time, I would notify risk, operations, and finance of timing and expected resolution. Afterward, I would document root cause and preventive controls. In your answer, describe how you would manage a production incident. Assess impact, communicate early, check market data and scheduled tasks, review logs, prioritize critical books, escalate, rerun safely, and document root cause. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.